Alright, good evening. I'm African Crypto Warlord, and today we'll be looking at a long-term analysis and then down to like the 15 minutes, so we can just see how our daily VRE levels are playing into each other, how our weekly VRE levels and monthly VRE levels are playing into each other, and we'll be watching Shannon Entropy. So we're going to start off on a high time frame, as well as watching our beautiful UMP that we have here, ultimate power mean, and using these points as a base. So we'll come back to regions like this. So it's been a while since I've looked at the charts. I've been waiting for these 21 days to populate, okay, and we're sort of populating next time soon, 28th of March, so a couple of days from now, towards the end of this month. So let's get into it. We'll be looking at it on Poloniex until about the daily, and then we'll switch over to lower term time frames. So what we can see here is we can see that our percentage returns on different lengths are all facing down, and we're below our UMP. So we got our flashes above over here, we got our flashes above, and then we started to float to the downside. Not so much of a fight, you could say. Just general direction to the downside. We can see that we're coming in to test our outlying events on our first oscillators. We can see that our returns have actually been like sideways, and that's because we've had a few wicks here. Let me switch this off. We've had a few wicks here, which does kind of mess with the data because, well, it doesn't mess with the data. It mess with your interpretation of the data, because the range might look big, but if you're only pulling your data off of open and closes, then this doesn't really mean much. You then start using other indicators, maybe like Laplace distribution and cones and all the good jazz that alpha trading has to offer, to see when those become statistically viable levels to make a trade. So then we'll move on to the 30 days. So we thought our 60-day had already gone through our mean reversion. They were halfway through. So now this is half the time frame. So remember, 60 days was flat, so we can see a little bit more range here, and we're coming back into our UMP. So just remember, 30 days at about 85 cents. Okay, and this number starts to ring out. Oh yeah, gotta lift it up. This number starts to ring out. In previous videos I've marked off. So 85 cents is what I've been saying for a while. We close above here, you can expect continuation of the market. So what's telling us on our returns oscillator here? We have some hidden bull dip, okay, that's formed here, and we're coming out of an outlier. So this still has quite a long fight till mean reversion, and you can, if you were to say that the bulls were to take over, I would say a mean reversion point would be around about 85 cents on the 30-day. So you can see that the 60-day is starting to fade out to the downside, but it can still continue, considering these haven't flashed yet. We have some negative expansion, but these are sideways, negative, and a negative is a positive. So we're looking for a little bit of test back in here to maybe sell off on the higher term time frames, and that's where 85 will come into play. And for higher term time frames lower, I like to use these on these crosses of our MAs that we have here, our UMPs, sorry, not moving averages, our ultimate power means. I like to use these as points to just double check if there's liquidity maybe sitting out here for a big fat wick. So given this is maybe our first attempt to now start going sideways, maybe see what's happening with regards to positive or negative drift on the Shannon. So this is 30-day. Internet is flying this evening. Well done, TradingView. Maybe did some good updates. Okay. Then we're going to move on to 21-day. I specifically like this because it's just a little bit more different. It helps me know what is sort of happening. Okay. So we have our general returns. Our outlying events have come a lot closer to where we can have a next outlying event, which means you can start looking for a trend once this thing starts to move. So these are a lot closer than, let's say, when we had a lot more volatility. Okay, and we're going to look for any mean reversion points. So we'll be starting to drop this now, and we'll start to look for, like, now this is how I start to look for things. Okay, so I have 2 points here. So if I was to throw up a distribution coin, I'd maybe throw it up on both 2 greens, long wicks. So this is a big range that we're in right now. But I can see that on the 21 day we are having our AVP flash, which tells me that volatility is at 0. And now we've got to start looking for a direction. Just with regards to our returns on the 21 day, we can see that we're pushing above our mean and above our MA. Even though our general like cloud of trendiness is going to go through the mean, we can still maybe look for another full at 85, and if it can push through there, given that as this gets closer here, we start to trend positive. If it stays in here and the crowd starts to turn around, just for simple explanation, we're moving into mean reversion on the 21 day. Randomness and correlation, we're starting to contract, right? So now I'm going to start looking for positive drift. So we're having mean reversion on our Pearson correlation with regards to both of these indicators on the 21 day. So it's quite nice. If you were to just compare it to most other little candles, so here's the previous mean reversion point. That's when it was very confused, this candle. A little bit of mean reversion point on the Pearson correlation, these candles. These candles. Yeah. As you can see, follow through, contraction, all sorts of goodness. So we can see that we have a little bit of mean reversion here. So both of them are positively correlated. We can see that this is contracting. The longer term one is contracting, but our lower term Shannon, a more sensitive Shannon, is expanding. So for now, this to me seems like it's going to be random, and it's going to be a little bit sideways until we get a confirmation, maybe for a bull test to go for a mean reversion on a 21 day, or a bear rejection if a lot of volatility comes in here, considering that it is 0. Okay, so then now we'll drop it down to 14 day, and we just get more surgical. So we can see that this helps and supports, let's say, the 21 day and the 30 day hidden bull. Just that the fact that the 14 day, about half of a month, is already its mean reversion point. There, high, so this is normal. Okay, so you're looking for a little bit of mean reversion to happen here. So there's a bit of a fight that's going to be happening to either close, as I say with this. So open this up. As I trade with this on the low term time frames, I'll wait for the one candle to close, to open above the UMP, with the next one to close above the UMP, and then that's more than likely within that candle, the second one closing above the UMP, I would have been able to see if we're trending, if we're going to break the trend to the downside, or if we're going to carry on trending to the downside. So that's being a mean reversion. We're coming through, returns are contracting. Our first scalping overlay over here is telling us a little bit of pressure to the upside. So now drop it to 7 day. So as you can see, we have 2 candles that are closing above the UMP here. So boom boom, and we based off the UMP. Okay, so maybe this is trying to start to help put in a little bit of hidden bull divs every now so often, given that it is quite a significant point. Okay, so this is the 7 day. We're looking a little bit overextended with regards to our return oscillator to the upside here. Our percentage returns on a whole bunch of MAs are good. So let's just go into our 14 day just to compare what the Shannon was. So Shannon is contracting, positively correlated, so that should lead us to a downside. Okay, oh, there's some big mosquitoes out here. 7 day being contraction or still positively correlated, but it's a little bit sloppy, and that's because of the angle of the dangle being down. That would have been an easier reason to keep it above the UMP. Just for a little bit of observation there. So 5-day. What do we have on the 5-day? We have Shannon Entropy looking for fresh expansion. This is quite a sloppy positive correlation. So even though returns are still positive, looking like a little, let's see, is it looking sickly? So yes, we are trending a little bit. We're still in trend mode to the downside, but given if this contracts, then trend mode to the downside is starting to get broken. We're moving to a very random point, but it's not random because our UMP is here. Let me bring this in front. So I have a whole bunch more. So we can see 2 candles. This is the first one to close below to see if the trend will continue to the downside, given returns a bit negative, but perfectly at the top. So we opened and we just shut down. Okay, so 3-day. Notice how returns are above. Okay, so 7-day, we have contraction, positively correlated. It's still quite sloppy. We have negative contraction being negatively correlated, so that's looking for us to float to the upside. That starts to help with the turnaround here, returns to the upside, moving to a random point. Maybe if we stay below the UMP, then we'll know that we'll wait for, let's say, yellow into a next pink. Then we'll know, okay, is this the random point that everybody thinks is random, and that being below the UMP, and that will help stop this thing from mean reverting, and more so stop it from crossing through its MA. Okay, but this is contracting, so this looks like there will be float, and that's what's just been sold out now. So on the 2-day, we have significant correlation with contraction, and that's what's brought us down. We are not in the trend with regards to our returns. We're still being held below the mean here, and UMP will help with that. Help us see 24. Okay, so contraction positively correlated, being contraction positively correlated, being negative drift, contraction was positively correlated with our negative drift. That helps us back to 2-day. So now we'll drop it onto Binance. And then we're going to throw on our VRE levels. So we're looking for mean reversion. Let's go looking for some flashes. Our flashes have happened up here before. Okay. And here. The bottom. No one's too low. No one's too low. Shannon contracting. Positively correlated. So now you start looking for continuation to the downside. To tell you, we've already had our outlying events through to here. So this is maybe testing those outlying events. Returns. Let's see if there is anything on the low term time frames that starts to maybe slow this move down. Should be 69 cents. Contraction, positively correlated, negative drift. I think this is not looking too healthy, guys. Contraction negatively correlated, so only on our 6 hour are we starting to get some trend prevention. So we have 2 minutes till 45-minute close, so let's see if I can get that. Okay, So we only have the low term time frames. Expansion negatively correlated, that's what's going to catch this thing. If both of these cross through the mean and that stays red, then this is just going to go to 69, 67. What we have on our return oscillators is telling us that we're coming through our outlier event, which is actually quite a nice little snapping spot. Given we've had our flashes, we've had it's going to be easy to get the first outlier event over here. So to spike into 73, and it's really had its outlier event, and that can get cut off quite easily then by the mean. So we are with our daily range. Okay, so there's our first monthly mean. Here's our monthly mean, 76. Higher top already been hit. First one broken through, UMP's crossing in, so that does match up. Low term time frames telling me usually when I have a UMP cross my VRE, that's when I'll start hunting a knife. And you start looking for daily levels, daily VREs. Yeah, this is our current daily VRE. The tighter this is, the harder this trends, but obviously it all comes down to timing. And you'll have a whole bunch more, so we'll more than likely find some flashes. There we go. Two of our flashes, these are low length APPs. This is a little higher length than that. This is mid-term, it's a long term, and this is a little bit of R squared and plus digit here. So just so I can get a little bit more drag, like on a reel, so I can either figure out if it's just the stream pulling it or if it's a fish that's biting. And then I'll know it's just the stream pulling it, and that's easier for me to know, not to strike early. So now I'll drop it onto, put it on the 3 hour. More than likely miss the 45-minute open, which is here. Okay, so a whole bunch of volatility is low. Shannon, that looks like it's got a hard fight for bulls to pull out of here. Significantly correlated, also contracting. We have some blue outlying events on our percentage returns. MAs, a whole bunch of these pretty much in simpler form with their flashes to tell me when they've hit their limits. That's coming up through, so we can remember this on the high term time frames. This is quite a big outlier event, I would say. Bit overextended. Let's start to drop it onto the 90-minute. I'm very interested in what the 45-minute, 15-minute will have to say. It's an interesting candle, especially from the 21-day. Okay. So returns, you see this, we're already having our first outlier, well, not yet, but our first outlier event is will be when we're above the UMP. Contraction, well, that's sloppy with expansion, so can expect to be sold into until it turns around. 45 minutes, a whole bunch of flashes, so we're lining up here as a very significant point, so I'm going to throw maybe a PB up over here, even we haven't had this date in a while, so that's 1, 2, 3, we could have a possible fourth. We just cleared it, so this would have, yeah, we're going to have that. There you go, there you go. So there's your fourth. So I'll throw up a UMP, so this is our 45-minute, very interesting, I love this. Okay, returns a little bit to the to the downside. Closed, looking suspicious, still flat, considered random, no trend here. Those are going to go negative, contraction, floppy, positively correlated, so maybe still just drags around here in these wicks. I'm going to go 1/3 of this, I'm not going to confuse myself. Okay, contraction, positively correlated, still sideways, given we're trying to close above a UMP, there we go, this is our 15 minutes. Okay, so a bunch of our return oscillators, let me do it like that. So a bunch of our return oscillators. It's the high time frame of this indicator. This is still the same. That's a lower time frame because that's why it's on the mean. So this high time frame, and this junction is meeting up here. So if you do see this little, guy flick through here, which would be quite hard given this is the circumstances, you'll see it close above a UMP, and then we wait for 2 candles to see if it can push through and have its outlier event there. Drop it onto 5 minutes, see how this fight's happening. Bounce on a mean, returns are still positive, contraction was positive correlated but sloppy. That's cool, we're starting to break away from a random event, but not the banner. One man getting hammered, contraction, positively correlated. We're going to come back and test our UMP. So I think I'm going to go maybe watching like a 3-day time frame and start to see what supports these moves, given that this thing just got sold into really hardcore. Contraction is negatively correlated, which means positive drift for the next 6 hours, which is ironically lines up to be where the bulls started to come in. Okay, so give that a little long-term time frame. It's 3 hours, 6 hours. Outlier events still significantly correlated, with start to know what will happen in about 40 minutes. We're having our first green, so when we looked at this originally, it didn't have a chance to set in something here. What our ultimate power means telling us, contraction is moving in significant negative correlation. Let me switch the Laplace and the Ariel, and these candles are hidden them. Okay, boom. First junction of interest being lost, looking to save itself, but can be cut down at 73.08 on a 45 minute. 73.08 being about there. Outlier event, positively correlated, random. We want this to turn around. So 45 minutes, 90 minutes into 3 hours, 6 hours, what we're baiting for. Okay, I hope this was helpful, and then we monitor the next few actions on the 3-day. Given it's a very big candle, but all it needed to set a green thing was just this distance. So, not that hard to defend. Have a good evening further.